Hi, welcome to the Crypto Republic. Before we dive in, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, subscribe to the Crypto Republic. This is where we break down the insider moves, the market mechanics, and the truth about XRP that nobody else is telling you. Stay informed, stay early. Every cycle has a turning point, a moment where fear-driven retail activity collides with strategic institutional positioning. And right now, that moment is unfolding before our eyes. While everyday investors panic and sell, the small rallies, the major institutions controlling billions are quietly stacking XRP and other crypto assets. History proves this pattern. Retail sells at the bottom, institutions accumulate in silence, and when the dust settles, retail rushes back in far too late. Look at the current numbers. Over the past few weeks, retail holders have offloaded hundreds of millions in XRP, spooked by market volatility and headlines predicting doom. Meanwhile, institutions are scooping up hundreds of millions more, the longest consecutive streak of accumulation in over a year. Think about that. As fear spreads among average investors, smart money is quietly positioning for a surge of liquidity headed their way. Here's what most people miss. They aren't tracking money supply trends, liquidity cycles, or the Fed's roadmap. They are reacting emotionally. They are taking profits too early, just as countless cycles before have proven disastrous. Meanwhile, liquidity is already building, and institutions are stepping in knowing that moves that retail hasn't even seen yet. When you step back and examine the macro picture here, it becomes clear why selling XRP now could be the biggest mistake many holders ever make in their lifetime. Every time central banks pivot, easing monetary policy, cutting rates, markets experience explosive upside. We're talking a rip-your-face-off rally. That data doesn't just lie. Look back at previous liquidity surges. Markets soared as fresh capital flooded in. This isn't luck. It's math. Ask yourself, do you want to be on the side of panic-driven retail traders or on the side of multi-billion-dollar institutions quietly stacking while assets are still cheap? Your choice today could define your returns for years. Leading voices in finance like Cathie Wood have highlighted this setup repeatedly. She calls digital assets a once-in-a-generation opportunity, a combination of scarcity, adoption, technological innovation. XRP in particular stands out because of its real-world utility, its speed, its liquidity, its settlement solutions for global financial infrastructure. Unlike speculative assets, XRP's price can move based on the adoption and usage. Real flows creating real value. Look at how institutions behave. Pension funds, asset managers, and sovereign wealth funds once ignored crypto. Now they are integrating it systematically. XRP is being positioned not as a gamble, but as a portfolio diversifier, a strategic hedge, a tool embedded in financial infrastructure. That is a completely different dynamic than retail trading. Supply and scarcity are critical. XRP has a fixed maximum supply, meaning institutional buying pressure directly impacts the price. The same is true for Bitcoin and Ethereum, though each serve a slightly different role. XRP is a cross-border payments backbone. Scarcity, adoption, and institutional alignment, these are the factors driving the next potential wave. Let's break down now why this all matters. Global liquidity is set to expand. Fiscal easing and energy price reductions act as stealth stimulus, freeing up capital for investments. Every corner of the market that's scarce or widely adopted stands to benefit this. Not just speculation. It's a historical, repeatable playbook. Retail psychology is predictable. Investors buy when headlines are bullish, sell when fear creeps in. Institutions operate on positioning, accumulating during panic, leveraging liquidity cycles and targeting assets with asymmetric upside. Retail is short-term. Institutions think in years. This is exactly what we're seeing in XRP today. Panic selling by retail, relentless accumulation by institutions, and a setup that could define the next major price surge. Now consider the global content. Inflation may be easing in the U.S., but worldwide instability is growing. Currency devaluations, political unrest, and capital controls are increasing demand for alternative stores of value. Bitcoin, Ethereum, and XRP are prime beneficiaries of this overall trend. Emerging markets, these assets are already used as protection against wealth erosion, a reality, not a theory. Scarcity is amplified by technology. Automation, AI, and robotics are reducing scarcity in labor and production. That scarcity premium shifts capital towards assets that remain finite. Bitcoin's hard cap, Ethereum's network effects, XRP's financial utility. Institutions are acutely aware of this, and they are acting accordingly. Meanwhile, other macro factors reinforce the bullish setup. Oil prices have dropped sharply, easing consumer costs and increasing liquidity. The U.S. dollar remains strong, supporting capital inflows into dollar-denominated assets. Lower costs, abundant liquidity. This is a historic convergence, one that rarely happens with such clarity. Retail is selling part of the cycle. Headlines spark fear. Charts dip. Investors exit positions, only to see institutions quietly accumulate. This transfer of wealth from impatient to patient is repeating, just as it has in previous cycles across crypto, equities, and commodities. XRP, however, occupies a unique lane here. As adoption grows in banking and payments, its price movements are increasingly tied to real-world usage. Unlike Bitcoin, which is primary store of value, or Ethereum, which powers decentralized applications, XRP value proposition lies in infrastructure, liquidity, speed, and settlement. That makes it exceptionally appealing to the institutions and the strategic buyers. The global picture reinforces this setup, ladies and gentlemen. Inflation, debt, and political instability are pushing capital towards scarce, neutral assets. Bitcoin is neutral. XRP provides utility in cross-border finance, scarcity, adoption, and utility. The three pillars that underpin asymmetric returns are converging now. The takeaway is simple. Cycles repeat. Liquidity drives markets, and scarcity rewards those who position early. Institutions understand this. Retail often does not. If you're holding XRP, recognize this current setup, please. Watch liquidity indicators, institutional flows, and consider the broader macro environment. These signals are flashing. The stage is set, and the next major move is already being positioned by the largest players in the market. Every choice today has consequences for tomorrow. Panic selling could leave retail investors chasing prices higher, buying back at elevated levels. Accumulating and holding in line with macro trends could reward patience with outside gains. The playbook has been proven for decades. The participants have changed, but the dynamics will always remain the same here. Follow the patterns. In short, XRP holders, beware, but also be prepared. Understand cycles, recognize the macro signals, and consider where strategic institutional money is moving. This is a historic alignment of liquidity, scarcity, adoption, and global trends. A perfect storm that could define the trajectory of XRP and the broader crypto market for years to come and the rest of our lifetimes. If this opened your eyes, smash that like button. Leave us a comment with your thoughts. Turn on notifications. And most importantly, subscribe to the Crypto Republic, bringing you the truth about XRP, global banking moves, and the wealth transfer already unfolding. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.